Thank you so much for joining today's virtual event. I'm so excited to have everybody. I'm Sarah Felberg. I'm the editor of Emerging Product at the Chronicle. And before we get started, I just want to let you know kind of how the next hour is going to go and give you a little bit more background. First of all, this is our first public Zoom event in about 4 years at the Chronicle. So please bear with us if there are any technical difficulties. Feel free to let us know in the chat if you're having trouble hearing anything or if you're having any issues. But we're looking forward to a great conversation today. Reporter Megan Muntz, who has been leading our coverage of the insurance crisis, has invited a panel of experts to help you understand the situation and learn how to protect yourself. And then we'll take your questions, so please drop them in the chat. If we don't get your question today, you can always post your question or share your story online in our insurance survey. That's at sfchronicle.com/insurance-survey. We really take reader responses very seriously in our reporting. So please feel free to share your story or your questions there. And if you haven't already, you can sign up for Megan's newsletter course on navigating the insurance crisis. It's a 10-week primer on what you need to know to keep your insurance and what to do if you've been dropped. I'll put the link in the chat to that in just a second. And editor Kate Galbraith and I will be posting links in the chat throughout the event to some of our recent stories and coverage so you can learn more. And without further ado, I'll kick it over to Megan. Thank you so much.
Thanks so much, Sarah, and thank you everyone for tuning in today. Like Sarah mentioned, I'm Megan Muntz. I'm a Chronicle reporter covering California's home insurance crisis. Over the past few months, we've broken stories about insurers raising their rates as much as 650% in one go, tens of thousands of homeowners losing their insurance all at once, and what the Department of Insurance is doing to try to solve all of this. And many of the stories that we've reported have come directly from questions that we've heard from you. But today we're here with a panel of experts to answer your questions directly. We've got two brokers with us today here to share their advice from working with clients directly. Jay Zemansky is president of Sadler & Company Insurance Brokers, and he's been helping homeowners from San Mateo to Sonoma find insurance for the past 45 years. And Jerry Becerra is an East Bay-based broker who also has more than 4 decades of experience, including founding his own agency in 2006. We are also joined today by Amy Bach, who is the founder and executive director of the consumer advocacy group United Policyholders. Amy has worn a lot of hats, from working with the California Department of Insurance to answer consumer questions, to serving in roles with the Federal Advisory Committee on Insurance and the National Association of Insurance Commissioners. And today she's here to speak with us. So there's no question that California's home insurance market is a crisis. Our reporting shows that the top 10 largest insurers alone have non-renewed more than 100,000 California homeowners over the past 5 years. And the number of homeowners who have been forced onto the FAIR Plan, California's insurer of last resort, has more than doubled over that same period to now over 400,000 homeowners. If you followed our work so far, you've read Jay, Jerry, and Amy help us break down these numbers and what's going on. And we're so grateful that today we're here with them directly in front of you to understand what's going on with the insurance market and answer your questions about how you can protect yourself. So to start us off, I want to turn to Jay. This is a really unprecedented moment for many homeowners, for me as a reporter, but I'd love to hear from you. You have 4 decades of experience working in this industry. Does this crisis feel unprecedented to you as well? Oh, I'm sorry, Jay, I think you might be muted.
What was that last part of your question?
Does this feel unprecedented to you the same way it feels unprecedented to homeowners?
Oh, this is the worst I've ever seen it. With the amount of non-renewals, as I was talking earlier, we're getting on my desk alone between 1 and 5 non-renewals a day for our clients. And clients are calling all the way up to 6 months in advance, worried about it. The problem we're having is that you can't quote out 6 months ahead of time. The most we're able to do is do 60 days in advance. So it's difficult. We're doing quotes now for clients going out into November. I did one for this January, I think a day or two ago, letting clients know that rates could change. We're having rate changes almost every day. We're getting notifications of company not writing certain zip codes. almost on a weekly basis. It's crazy. It's the best way to say it. So what we've been doing is the minute we get a non-renewal, we reach out to the client and let them know what we can do. There's several ways of going. A lot of people don't want the fair plan. The fair plan isn't the only way to go, but there's nothing wrong with the fair plan. It's a fire insurance policy, and they're taking out for fire insurance. Then we do a difference in condition, a DIC policy to cover theft, water damage, and the liability. And then we can have umbrellas for extra coverage under the liability section. So there are avenues we can take, but they aren't the premiums that people used to pay. The cost of homeowners insurance has been traditionally the cheapest bet you can get, because for a very minor amount, you get a massive amount. We had one client with a $2.5 million home that they bought. It was completely burnt down in the 2017 fires up here in Santa Rosa. The company ended up paying out a total of $11 million between contents, additional living expense, and rebuilding the home. So the carriers have been hit hard. The people have been hit hard. The carriers have to recoup some of their funds in order to pay claims in the future.
Yeah,
And that's
absolutely.
what we're seeing, and that's what we have to explain to the client.
Mhm.
The kind of paying it forward, pay
Yeah.
now in case something happens in the future.
Absolutely. You mentioned, all of the new non-renewals that are coming in. I want to turn to Jerry. We've heard from readers about things like knob and tube wiring or issues with their roofs. What are the things that over the past couple of years you've seen insurers paying attention to that they might not have been picking an issue with before?
There are some things that are a little bit new. The use of drone technology to inspect roofs is pretty new. And so we're seeing that happen. And I've seen people challenge that and succeed sometimes. But what insurers are looking for per se hasn't changed. What has changed is that it's really almost impossible to fly under the radar and get by with things that you used to get by with. So I'm still kind of shocked by the amount of knob and tube wiring that people have, because it hasn't been code for, well, 70 years or more. I mean, it's just really old stuff that people have not been able to update. And then galvanized plumbing that wears out, that's an issue. And so a lot of this with homeowners is deferred maintenance. And that certainly, if you have deferred maintenance on your building, you're going to have a lot more trouble placing coverage than if you have a well-maintained building. The four systems they look at are the roof, the plumbing, the electrical wiring, and the heating. If I had to prioritize those, I would say the roof number one, the electrical wiring number two, plumbing number three. That's in the current market. Those things have shifted around over time, but a lot of emphasis right now is being placed on electrical wiring due to knob and tube and also due to faulty circuit breakers. So there's a lot of attention being drawn to that. And then just overall maintenance and upkeep. You don't want an attractive nuisance like graffiti. You don't want garbage piled near the building that could be a fire hazard, all this sort of stuff. You want your building to pass an inspection as easily as possible. So if you can set yourself up for that, you will be in a much better position.
Barry, if I could jump in.
Please.
Absolutely.
On that note, both the things that are happening on personal are happening on commercial. I'm having non-renewals on commercial.
True.
For the similar reasons. And I'd like to take a moment, the electrical, that's not only residential, it's also commercial buildings they're looking at. And there's a couple of different circuit breaker panels that the companies are canceling policies if the building has them. I'm not going to talk about them right now. You can talk to your individual broker, but there's two specific types. I had one client that the premium doubled from 15 to 30,000. Then the company came in and they spent another 30,000 on putting all new upgraded circuit breakers in. So there's something that you should talk to your broker and take a look at the circuit board and send them a picture of
Sure.
it.
But realize that, I mean, this is a concern for insurance pricing. It's also a fire life safety concern. What the
Correct.
problem with these panels is that a lot of them have aluminum parts that after 30 years or so start to wear out and can cause electrical arcing inside the panel that can burn down your building. And so it may cost a lot of money to replace your panels, but it's going to be a lot more to try and recover from a bad fire loss. So I do think that, one thing that's been good historically about insurance companies is they do draw attention to safety, and they really have made our life a lot safer. We wouldn't have seat belts without insurance. So I think, you know, we do serve a purpose beyond just, protecting property.
Absolutely. For Amy, you're hearing about these problems that consumers are facing right now. From your perspective, where are we in the insurance crisis? Have we hit the peak, or are things going to get worse before they get better?
Well, Megan, United Policyholders has been tackling this problem on behalf of the home and business owners that are being impacted since 2016. And I would say it has continued to get worse. It was early on, it was very much a rural and a suburban problem associated with wildfire risk. And when we first saw it, we thought because there was a connection between the revelations about the tree mortality crisis and there being 120 million dead trees, that where we first saw people starting getting dropped in those areas, we initially thought it was very much a sort of a fears around climate change, that the insurers, they are one of the first sectors to sort of say the words out loud, embrace it. And they were definitely, they are adapting their operations in anticipation of more frequent claims due to climate change impact on weather events. So more severe convective storms, which is like super heavy rainfall, more hail, bigger hail balls, more strange wind events, derechos, and all this stuff. So in the beginning of the crisis, we definitely were thinking it was a lot more related to climate change. Now that it has migrated into the urban areas and it has also migrated all across the country, it's now clear that it's very much also being driven by technology. And that's why it's hard to answer the question about where are we, because we really, I say, like, we can't, now that insurers, they are taking a magnifying glass to risks that they formerly took much more blindly. In some ways, all bets are off because, especially if you're a publicly traded insurance company and you have shareholders that you are beholden to, you're going to look at this data that you're buying. You're going to look at the aerial images from the drones. You're going to look at the AI. You're going to look at all the data, and you're going to go, well, how could I responsibly, with these shareholders and my customers and my own financial needs, how could I responsibly continue to insure this property when I see all of its warts? So I think that we do have some kind of really deep problems here. And then, you look at, look, we're working very hard to help people reduce risk, right? So certainly in the wildfire context, we've made a tremendous amount of progress in being able to explain to a homeowner, these are the things you can do to make it less likely that your home would be damaged or destroyed. This is the kind of documentation you can give your insurance company. We're working in Sacramento and with insurers and the department to get insurers to reward this risk reduction. The problem that we have, that a lot of your readers and your viewers have in more urban areas, is paying for these things, right? I mean, everybody has that problem, right? If your insurer is telling you to put on a new roof, or your insurer is telling you to upgrade wiring in a building, especially in a multi-unit building, that can be very pricey, right? All these things are pricey. So, we are talking to lenders about, could you develop some loan products just for mitigation? But it all comes back to one reality, Megan. We have been relying on a for-profit industry to serve in the role of a utility, right? Like PG&E, they got to keep the lights on, so they're regulated. And insurance, it's in a bit of a blurry area, right? It hasn't been considered an essential good or service in terms of the government's ability to tell insurance companies who they have to serve, right? We don't have universal service. And that's kind of at the heart of this, right? The post office complains, oh, well, we have to serve every rural route. UPS doesn't, right? That's unfair competition. Well, what we have with insurance is a new normal is insurance companies are really, they're very nervous about things that they used to not be nervous about. So I do believe we're probably a good way half into trying to solve it. But we do have a ways to go because I think that you're not going to put the tech genie back in the bottle. They're not going to stop using these tools. And they are for profit companies. So we are going to have to do a little bit more, I think, government support and particularly in the area of reinsurance, which is one of the big drivers of what's going on.
Absolutely. I want to get into, in this new normal you're talking about, what homeowners can do to protect themselves. And starting with Faye, you mentioned this a little bit, but with rates changing every day, under California regulations, you get at least 75 days notice before you lose coverage. But how realistically, how early can you get a new policy? When would you recommend that people start looking for new insurance after they get the notice that they're going to be dropped?
Well, I would say 60 days in advance is earlier. I said earlier that you're not being able to get a quote that's going to be valid. Companies will not offer you a quote that's good for more than 60 days. So you get the notice. Like I said, on my desk, I have a couple who came in today for November. Too early for me to get the quote. I can work it out. I don't think there's going to be changes that soon in the company. Get it out, talk to the client, let them know what's happening. I have another client, little elderly lady, very nice. She had a tree taken down. She's getting things cleared around the house. Really cute little house. And she's going to send me pictures. And I'm going to send them to my underwriter. And I'm going to be your advocate. And we've done it before. And we've gotten the renewals in. I had one. The woman had a new roof put on 2 days before the renewal date. I was able to get it renewed. So people are being proactive on taking care of their property. Myself, on Monday, I have one oak tree in my backyard and big branches. It's got to be 150 years old. And I had tree trimmers come out and take a third of the tree away from my house. And now I got to send pictures to the insurance company. So everybody is affected by it. And the thing that they want to do is they want to have a nice, clean, defensible area around your house. And if you saw what happened in 2017 in Fountain Grove in Santa Rosa, nobody is immune to a raging forest fire, unfortunately. So having defensible area around the house is the difference between losing it and not losing it. And that's been shown repeatedly.
Absolutely. And when you do unfortunately lose it, a big concern for a lot of homeowners is how this might impact their mortgage. From your experience, Jerry, what should homeowners be looking out for to make sure that they don't get to a worst case scenario where getting dropped by their insurance company leads to problems with their mortgage lender?
Ooh. Well, there's always the FAIR plan to fall back on if you have to, and the mortgage companies have to accept the FAIR plan as coverage. So in your worst case scenario, that's where you'll be. And I think that unfortunately, a lot of people may be in that situation, particularly if you're in a brush fire zone or area that's difficult to insure. And brush fire zones are not what you might think they are sometimes. You can be a mile or more away from a brush fire zone and still be in that zone because sparks will fly that far on the wind. And so I've seen companies recently call out the Presidio as a brush fire zone, and that's covered in fog every day, but it's still surrounded by trees. So, you should probably be looking at where you are on a map, and it can be kind of hard to predict. But yeah, when it comes to and Amy was talking about the economic impact of all of this, you know, insurance in a way is the flip side of the banking industry. Bankers won't lend without insurance on property. And so we kind of need both industries working together to make the world go round, and it's a tough place to be. So I could definitely see this impacting banking in the long run.
Mhm.
Maybe you're seeing it already. I don't know.
Yeah, one reader that we've heard from spoke about, losing their insurance, and then their bank actually went out and bought insurance for them on their behalf. What's going on there, and what's the sort of drawbacks if that happens to you?
Well, force-placed insurance is not really insurance on your property, it's insurance on the loan. And so you're not really going to get much benefit of that. And it doesn't include liability coverage, and and it's very, very costly. So you'd be, even if you're paying a premium to go somewhere else, you're almost always better off not going with the force-placed coverage or trying to replace it as soon as possible. And I have run into people who thought that they were fully insured because their bank had placed coverage on them and they didn't realize the situation they were.
Yeah, yeah. For Amy, we had another reader write in for the event. She talked about how her insurance company dropped her because of her wildfire risk. She had the local fire department come out and they did an inspection and actually came back and said they didn't believe her property had high wildfire risk. What is sort of the process for someone who's trying to come back to their insurance company and maybe challenge a finding or challenge something that they've said about the home?
Well, there are official channels you can pursue, and then there's the unofficial, person to person try to problem solve, right? So, the Department of Insurance has put out a rule that says that your insurance company has to tell you what your risk score is if they're using a risk scoring system, which is helpful to know. And then an appeal process. I think we have a little work to do to say, well, okay, how do you win the appeal process? But we got that was new. But what we tell people is first of all, take whatever physical documentation you have, including if you can get a letter from your fire department and photos, and send that to your insurance company. And like with everything, the squeaky wheel is, being that squeaky wheel is important because some insurers, if you get to the right person, and this is where it really helps to have a proactive agent who will run interference for you, because sometimes it can be hard to find the right person. You may get them to reverse their decision based on the information you give them. You can always file a complaint with the California Department of Insurance. It's free, and that may give you a little bit more leverage. But there is at least one insurer that thanks to some pressure from my organization and a lot of other sources, they have actually changed their rules around that they will renew you if you meet the standard, the wildfire prepared home standard. So again, it's we're when you said where are we, and I said we're about halfway. I think we are, when it comes to knowing what reduces risk, we're like 80% there. We know what you have to do. It's getting insurance companies to buy it, to agree to it, to reward it meaningfully. That's the key, because a 5% discount's not going to make a $20,000 a year premium affordable for a household, right? It's got to be really significant, in terms of the reward you get for doing all the work and putting all the time in.
Yeah, and there's a lot of different mitigation standards out there. You mentioned the wildfire prepared home standard by the Insurance Institute for Business and Home Safety. Could you tell us a little bit more about that standard? What's involved in that, and if a homeowner is interested in getting certified and being able to tell their insurance company that, what's that look like for them?
So IBHS, Institute for Home and Business Safety, national research organization, fully funded by the insurance industry. So you heard, I think it was Jerry mentioned, like, we wouldn't have seatbelts if the insurance industry hadn't said, hey, we're wasting money here on these, and we could be saving lives and all that stuff. When we started this RAP working group that we have, that my group hosts, and we started it because we heard about firefighters in rural communities going into helping Mrs. Smith when she got her non-renewal letter, going to her house, giving her the list, telling her what to do, helping her do it, and then giving her that letter that says, you're looking good here, right? Those were helping people get renewals. So we thought there's something there, right? This is a expert source. So when we said, okay, fine, let's make this into a process. We found that there weren't really a concrete set of standards. So we really pushed hard to have that happen. IBHS came along about maybe 2 years into our working group's efforts, and they put the standard out. It's, replace your roof, or it's got double pane windows, and you want to put mesh to keep embers coming in. Then soon thereafter, CAL FIRE and the Department of Insurance put out an almost identical standard, safer from wildfires. So we've got those lists. I've always thought, well, insurers, they bankroll IBHS. So if IBHS blesses something, they're going to be on board with it. And that is happening. Where we keep getting stuck is the for people who love their trees, and I love my trees, and I was getting pain. I was hoping Jay wasn't going to say he had to take down his 150-year-old oak. Is that complying with the rules. It's not just expensive, but it requires like a lot. Like if you ever drive in a car with, like, my parents, for example, who are in their 90s, they still are annoyed with having to wear a seatbelt, right? That's just because they grew up without it. People are gonna be very frustrated. They are frustrated about being told to take out landscaping that they've spent years putting in, and also because people have this feeling of like, nothing's changed on my end. Like, why is suddenly my insurance company saying that I'm this huge risk when they've been insuring me for 20 years and I've never put a claim in? So we have a real disconnect there.
Yeah. Jerry, I want to come back to you. Sometimes when you get these notices of non-renewals, like Amy mentioned, they might say, we'll keep you if you bring your home up to this mitigation standard or if you install new pipes. And as Amy mentioned, these are often expensive measures, but is it worth it for someone to do that work in order to keep their insurance?
Are you asking me or Jay?
Yes. I'm sorry, you, Jerry.
Is it worth it? I think it's worth it for two reasons. First of all, you're protecting your own property. Second of all, you're probably expanding the number of insurance companies that either will look at your property now or will look at it in the near future, because there's next year too. And you may get through this renewal cycle, but maybe next year they're going to be scrutinizing your property. So use the runtime that you've got and try and take care of these situations, and documentation. I had to do this for my own home. I live in the Oakland Hills, and I'll tell you, I keep good records, but pulling together all the documentation you need to prove to the insurance company that you've done what you need to do is a little bit challenging. And so I think even the time it takes to pull that all together and keep it in a nice, neat folder where you can make the information available, don't shortchange yourself and feel like this is something you can do in 10 minutes and get it ready for your insurance company. It's going to take some time and effort.
Yeah, absolutely. I want to pivot a little bit because this crisis isn't just about people being dropped, it's also about the difficulty in finding new insurance. And so I'd love to speak about the options and the troubles you might run into there. One person in the chat is asking about the home buying process and how that's impacted by what's going on with the insurance crisis. So going back to you again, Jerry, for someone who
I couldn't hear that word. What?
the home buying process and how
Home buying
that's being
process.
impacted.
Okay.
If you're someone who's trying to move to California, maybe you're moving within California and you want to keep the difficulty of finding insurance in mind, what are your options for when you're looking at homes and you want to know, is it going to be easy to find insurance here or not?
Well, you look at the neighborhood and how safe the fire score is in the neighborhood, and maybe that makes a big difference. But a lot of people want, older properties, or they want, a building with charm, and charm comes at a price. But one thing I've been very successful with is that if you have the luxury of time and you can, let's say you're planning to remodel the property when you move in. Close your escrow on a course of construction policy so that you can get the remodeling and bring the building up to code so that you can get the best out of it when you do convert it to a homeowner's policy. I mean, I've had some great success for small apartment buildings and for some private single family homes doing that. And at the end of the process, you end up with the home you want, but you also end up with a home that's much more insurable. And that does help a lot. But I also think people used to wait to the last minute to get to place their insurance on buying a new home, and you really can't. I think it's something you need to start off right away and see where you are, and don't take the contingency away until you know you can place coverage.
Mhm.
Maybe Jay has more practical advice on that. I don't know because he sees a lot.
There's a couple avenues here. Clients who are mine already, I tell them when they're looking for a house, if they see a couple of houses, text me the address. I'll work it out. I'll see what it looks like. I'm in a international networking group, BNI, and get referrals on a regular basis. I mean, there's one point where I had, I think, 7 referrals in 10 days. And it's a question of when people are looking at houses, we get in contact with them and say, give me the address and let's see what we can do. And then we can say, it's got to be the fair plan, or we have some alternatives, or one of our companies, we're able to write with some of our companies, but on a limited basis. So if it fits in that little spot, it's great, but it has to fit in very tight restrictions for companies right now. But people can call up if they give us the information. We can tell them what it's going to look like, and it's being they're proactive. They have a roof inspection, they have a house inspection, they shop around for their mortgage, and they call up and they say, well, I'm going to close in 2 days. I need insurance. And it's not like that anymore. And what they have to do is when they find the house and they put in an offer, or even before, give us a call and let us map it out for them. And that way they can know what they're looking at. Because a couple of cases have been closed off because people couldn't afford, between the mortgage and the taxes, the insurance would add so much that they couldn't afford the house. So, it doesn't take long to call our office and get an answer. Usually it takes less than 5 minutes.
Mhm. Yeah. Sticking with you for a minute, Jay, if there's someone who can't get insurance on the traditional market, they've got 2 options. There's the California Fair Plan, and then there's the non-admitted or surplus line insurers. Can you tell us, a little bit more about what a non-admitted insurer is, and if you're someone who's weighing those 2 options, why you might choose the Fair Plan or a non-admitted insurer?
Okay, first of all, let me say the California Department of Insurance does a good job of vetting out non-admitted carriers that are written through general agents. A general agent is a broker for a broker. So they are checked out on that. They do have their best rating. And so they're pretty safe. What they don't have is the California Insurance Guarantee Association, CIGA, which you'll notice sometimes on your insurance policy. It'll be a tiny tax, and you may have a bill for $2,000, and it will be $1. And what that is that if a admitted carrier goes belly up, not solvent anymore, there's a fund, I believe, $100,000 to cover any claims in the interim. I mean, if you know the company has gone away, get other coverage. Don't stick around with it. People have ongoing claims, and that actually happened to me once. The Guarantee Association will pick up part or all of that claim. A non-admitted carrier doesn't have that benefit. So you lose that benefit. As far as I know, and Jerry, you may want to step in on that, that's one of the biggest difference between admitted and non-admitted. It doesn't guarantee.
It is the big difference, and you're right. The state does a good job. They review the financials of all the non-admitted insurers, and there's also a nonprofit organization in California that reviews them and monitors them. Plus, the wholesalers that sell for them have a responsibility to monitor them. So I found them to be safe. And we don't sell anything that's not rated at least A minus, preferably A. So they're all considered excellent in terms of financial strength. But it opens up another market. It's another avenue. However, it's not necessarily less expensive than the FAIR plan. It really varies from property to property. So what you can sometimes find through them is broader coverage. The FAIR plan is going to offer you that named peril form, and it's a dwelling fire policy. But you're not going to get that. You might be able to get much broader coverage through the non-admitted market. And so that might make it better in the long run because you're not stacking one policy on top of another to try and get a complete package.
So I just want to throw in, Megan, for for those who are watching, listening, that in the past, my organization, we advise consumers. That's part of what we do, give them free information. We would always say you don't want to be with a non-admitted insurer, not just because they're not part of the guarantee fund, but because their rates and their forms are not as regulated, and there may be some limitations in the policy that you would not be aware of. So that's why we tell people today in this market, it's very important to find an agent who's really on top of their game, like one of these gentlemen, because they will they can really help you with these unfamiliar brands. And you heard Jerry say, I won't put a customer with somebody if they don't have a financial strength rating of a certain amount. That's the kind of thing for an individual consumer. It's very hard to figure it out on your own.
Yeah.
Can I also just step in that the quotes we are producing for some of the non-admitted carriers, the major parts of their coverage are actually stated on their policy. So you can see where the limitations are, usually have to do with theft and water damage, things of that sort. But they've been very good about stating it, big bold letters right on the policy on the first or second page, so that consumers can actually see it. I mean, it's not a negative thing. It's what's available now. And the FAIR plan doesn't offer some of these coverages. And so they may pay a little bit more, but they're going to get something for what they're paying.
Yeah. Really quickly, we're going to turn to our live questions in a second. But while we're talking about these non-admitted insurers, these are not the big guys like State Farm and Allstate who you can call an agent up for. For both the FAIR plan and a non-admitted insurer, Jerry, do you have to go find a special agent, or do you just contact a typical insurance broker?
Usually an independent agent is going to be able to access the non-admitted market. But I would challenge you on what you just said, because some of the non-admitted carriers are actually divisions of really well-known admitted companies. So for instance, Nationwide has a non-admitted company called Scottsdale. Travelers has a non-admitted company called, gosh, now I'm blanking out. But regardless, a lot of times companies have two divisions, and they write both admitted and non-admitted. So you may in fact be with a non-admitted carrier that is a name brand, and so don't write them off. They exist to provide coverage that is not fit in the standard market, and so I wouldn't write it off. It's another avenue that you should explore.
Jerry
Thanks
just
so
took my thing away from me on saying that, but he's absolutely right. The major carriers have secondary markets that are just as viable as their admitted carriers, and it is proving valid for what we're doing, finding coverage for our clients.
Absolutely. We are going to start taking some questions from the Q&A now. Thank you all so much for these great questions.
Yeah. So, we'll start off going back to you, Amy. We spoke a little bit about wildfire risk scores at the top of this conversation. One attendee asked if you could speak a little bit more about what goes into these wildfire risk scores and where they come from.
So the first one we all knew about only had three things. It evaluated, gave you a score based on slope, where you are you on a hill, what kind of grade, fuels, trees, bushes around you, and access, like how easy would it be for a fire department to get to you? That was kind of a very rough tool that kind of got a lot of people bent out of shape. Since then, a lot of other competing scoring systems have come online, and they have lots more variables, including the style of construction. There's a lot of tech. There's a lot of sort of tech money coming into buying these like Zesty AI. They are one of the big ones that the Fair Plan is using their scoring tool. And what the proponents of those scores say is that we give you this much more granular look at the property, and that in fact that can even in some down the line will help consumers, because if people have better than average conditions, that will help them. We're not there yet. It feels like everything's hurting the consumer right now. We're looking for the help the consumer part.
Yeah. And Jerry, we talked a little bit about knob and tube wiring. One person is wondering, maybe you aren't at the point where you're getting dropped, but you still have knob and tube wiring in your home, or you still have outdated pipes. If you go ahead and do the renovation on something like that, does that usually get you a discount from your insurance company?
No, those two things will not give you a discount because they're considered normal maintenance. So discounts tend to come from things like alarm systems, sprinkler systems, things that add extra protection to the property. So, and that indeed is the problem with things like knob and tube wiring, where, these are just antiquated systems that have become dangerous over time. So knob and tube wiring is just bare wires covered with bitumen. They're perfectly safe when they're first installed, but over time that bitumen deteriorates and starts to crumble away from the wires, so you have exposed wiring in your walls. And then people love to insulate their walls. So you can insulate around that, and pretty soon you have a fire hazard because you've got insulation up against bare wires, and that turns into a real problem. So no, these are maintenance issues more than they are improvements. But you can do improvements that will give you discounts, and a lot of times those are advertised by the insurance companies.
Mm-hmm. And if you do something like installing an alarm system or a leak detection device, how can you make sure that your insurance company has that updated documentation to give you the reward for it?
Send them a receipt. There's nothing better than a receipt. We got the work done, here it is. And proof that you paid it. And that's going to do a lot, preferably with a good description of what you paid for.
Yeah, absolutely. I want to talk with you, Jay, a little bit about homes that have done things like cutting back on trees or doing other wildfire risk reduction. One person's wondering, in your experience, do you see people get the reward when they do that?
Yeah, we've had a number of cases where we've gotten it renewed. One where they put a new roof on, but clearing the brush away. One woman I talked to yesterday, I Googled the house, which I always do when somebody gives me an address, and she had a really nice bush right up against the house. I said, got to take it out. It wasn't a real beautiful one. It didn't flower or anything. It was just way too much. And there was some growth in the back, and she had very nice, all these different plants and palm tree and all this in front, and she just had to clean it all up. And it's a November renewal. So she actually is actively doing all that work. And she's going to send me pictures. And if she can't take them, I'll run over and do it myself. And because of all this going on, I actually had to buy a drone. And so this way we can take pictures of the front and back of the house and the pulling on the roof or not. So it's really important. And we actually have a couple of roofers that we do business with. And we refer to them to go to these people's homes and get a report that they have substantial. I just did one, a 2-unit place on Manzanita Street in San Francisco. Very nice area. And they were non-renewing it. And I got it renewed. So it's a great boon for the client. They pay $100 to the roofer. And if they need a new roof, they may get a bit out of it. But whatever, it's really helpful. And if people are concerned about that, call your local roofer and get a report saying that the roof is solid. We turn it into the insurance company, and because of that, they have to renew it because they're saying they're not renewing it because of bad roof, and we prove it's not a bad roof.
A quick one for you, Amy. We've got a couple of people asking about condos and how they're faring in the insurance crisis. Now, obviously, when you're in a condo building, you've got the master commercial policy, and then you might have the personal individual condo policy as well. A real quick one for you. Are both of those eligible for the FAIR plan, or can you go to the FAIR plan if you're in a condo building?
Well, the condos have been getting hit. I mean, there's long list of people who are getting hit hard by non-renewals and premium increases. Condos are getting it really badly. A lot of that is insurers worrying about water damage claims. Water damage claims are the number one, most common claim, and insurers with all this tech now, they see it and it's, scaring them. So currently yes, you can get you can go to the FAIR plan, but the limit currently has been 20 million per location. So if there are multiple buildings, they won't all be adequately insured. And then there's this other concern with the FAIR plan that gets in the weeds, a co-insurance clause. If you don't have enough insurance, you can get penalized. So there is the commissioner has advanced an agreement with the FAIR plan to now increase that to 20 million per building, with a max of, I think it's 100 million per location. So condos will get some more relief with that. But for sure, there wasn't a really competitive market for condo insurance in the first place. There were a relatively small number of insurers that were covering condos. So that's one of those areas where we have a lot of work to do. And it's not just California, it's a huge problem on Hawaii right now, and in lots of other states.
And Jerry, do you have any advice for someone who's looking for new insurance for a condo building? Any tips and tricks or things that they should know about the specific ways that the crisis is impacting condo buildings?
Yeah,
Sorry, Jerry.
go ahead.
Oh, your commercial, you go.
Okay. Well, it's really property by property, because you can have a condo development that's brand new and is really easy to insure, or relatively easy to insure. And then in San Francisco, it's not unusual to have Victorians that have been converted into condominiums, and then you have all the same problems you would have insuring an older home. So it really varies a lot. I think condos present the best thing I can say about insuring the condo association is that if you can find a relatively stable market for the association, we're seeing less volatility in the commercial market than we are in the personal lines market. So you're probably not going to be canceled as easily. You're probably a little safer there for the time being for the building owner, or I should say for the whole association. So that's a little bit better picture. I don't know, Jay, do you want to jump in?
Well, the association should look, because I've gotten calls saying the premium tripled and it's going to be up in 2 days. Was not to help them on that. And they can go to the FAIR plan, but remember, FAIR plan doesn't have any liability, doesn't have the water damage. And so you'd have to get that on a separate market. And it's critical that condos have not only liability, but also directors and officers liability.
Sure.
It's one of the big things that they don't think about it sometimes. And so you really have to educate the people on the board for condos, because they don't know anything about insurance. So you have some education with your clients, sometimes a little bit more than residential because of all the differences. But Jerry can get more into that.
Yeah, I think though that an association, one good piece of advice I can give you is the association should really realize that if you run into a really good offer, you should grab it. Yeah. And because I worked with an association about a year ago, it was large. It was almost 500 units, and I had a good offer from Travelers, and they felt they had trouble making decisions, and they chose a different agent that put them in a surplus lines carrier. I guarantee you, Travelers won't write that today, but they would have stayed with them and held on to that risk and probably had modest premium increases. And they're going to be back in the market this year shopping again. And who knows what their premium is going to do. So, don't think this is not a buyer's market. This is the insurance companies have a more control over what they're offering, and, evaluate things carefully and try and make a good long-term decision about what carrier you're going with.
I think Jerry made a good point that one of the primary things is that people should have a good relationship with their broker or their agent. Somebody that they feel comfortable in talking to and spending a little time to. I have no qualms about having clients, whether commercial or personal, calling up and wanting to spend 10, 15 minutes just going over renewal, even if there's no problems, just so you touch base with them. Sure. And if people spend a little more time once a year on that, they'd probably be a lot happier and have better understanding.
Yeah.
Oh, the other, open your mail. Not everything comes on email.
Such good advice.
So getting a call saying, I have these envelopes here and I opened them, but the policy lapsed 2 days ago and the envelope's been sitting here for a month and I have gotten that. And in today's market, you've lost that. And then you go into the secondary market.
Open your mail is great advice because number one tip from UP, as soon as you get a non-renewal notice, you got to start shopping. Like you might need every one of those 75 days to get something in place.
Yeah, absolutely. Well, Jerry, Jay, and Amy, thank you so much again for speaking with us today. And thank you again to everyone who tuned in and submitted these questions. We weren't able to get to every single question today, but as you heard from Amy at the top of this conversation, California's home insurance crisis, unfortunately, is likely to end anytime soon. But until it does, the Chronicle will be here covering everything you need to know with the help of experts such as these three. And so much of that reporting and the questions that we ask of experts like these three come from the questions we get from you. So I hope you'll continue to reach out to us, whether it's through the insurance survey that Sarah shared at the beginning of this conversation, or you can always reach me by email, which is at the end of every article we write. Whether it's reaching us there or finding us in other ways, asking us questions, telling us about what you're seeing going on in the market helps us ask more questions and get more answers for you all. So thank you so much to everyone who's helped us report on this crisis already. And with that, I will hand it back over to Sarah.
Yes, I just want to echo what Megan said. Thank you so much to all of our panelists for joining today and to our audience for the great questions. It's been such a pleasure to have you. As Megan said, we are absolutely committed to covering the crisis and everything that's affecting California homeowners. In the last week alone, or the last few weeks alone, Megan has been the first to report a number of crucial stories about this crisis, and we are really committed to following it and helping you navigate. Please look at these links. This is how you can sign up for Megan's newsletter course. It's a 10-week course with lots of details on the topics our panelists discussed today. Please share your story with us at the link below and find our complete coverage of the California insurance crisis at sfchronicle.com/home-insurance. Thanks so much to everyone and have a great afternoon.